Petrol companies deny they are price gouging as fuel costs around the country rise. The federal government will spend an extra $50 billion over the next decade to better defend Australia. And Barbie-mania goes on with the launch of Barbiecue sauce. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 18th of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Matthew Saxon, who is the Global Chief People Officer at Zoom.
Yes, and very nice fella, actually an Australian who now works in Austin, Texas, remotely, I would like to add. We talked to him about the evolution of Zoom, particularly during the pandemic. He was there, and then afterwards, what's happened. We talk about the fact that a couple of months ago, Zoom came out and said they require people to come into the office. It was kind of ironic, shall we say. It's all about hybrid working, though, as far as Matthew's concerned. And so we talked to him about that. It's just a really interesting chat about how Zoom has gone through this incredible evolution and where they're up to now.
Yeah, it is a really good interview. It's coming up after the show, so well worth sticking around for. And while you're kind of playing around with your phone or whatever you're using, your laptop, head to fearandgreed.com.au. Right now, we'll wait for you for a moment, and sign up for the Fear and Greed weekly newsletter. It did come out yesterday. It comes out every Wednesday, but there's no time like the present to sign up so that you get it next Wednesday. Had a fantastic response to yesterday's edition. A few, I suppose you call it hot takes from Sean Aylmer. That's have you heard it referred to as a hot take, where you've got a bit of a
pretty confident that no one has ever called it a hot take.
No, it's a very kind of it's probably a millennial or a Gen Z kind of thing, to be fair. So
right. Yeah. Just put that barb in there. Go for it.
Just a little sledge to start the show. The main story this morning, Sean, with the cost of living crisis in full swing, the competition watchdog, motoring groups and the energy companies are pushing to improve transparency on petrol prices. And Sydney fuel prices have peaked, but motorists in Brisbane and Melbourne should expect higher prices within a fortnight. That is not good news.
No, so Sydney's petrol prices are significantly higher than other major cities, NRMA data showed this week, and the motorist group accused service station owners of massively overcharging. About 40% of service stations in Sydney were charging $2.35 a litre or more. That's according to the data. It's well above the wholesale price, which is $1.87, according to the Financial Review. The average price of regular unleaded petrol in Melbourne sits around $1.96. Now, both Viva, which operates Shell stations, and Ampol have denied their price gouging. They say the higher prices are linked to operating costs and market cycles. A Viva spokesperson said Sydney is 1 to 2 weeks ahead of Brisbane and Melbourne in the cycle, and the harbour city peaked over the weekend. That means the peak is still to hit Melbourne and Brisbane, unfortunately. And if you, like me, wonder why prices jump sharply and then seem to take ages to drop, there is an answer. Fuel prices go through 4 to 6 week price cycles, where prices drop 1 to 2 cents per litre per day until the end of that cycle, to the end of that 4 to 6 weeks, and then they jump up about 40 cents per litre in one go. That's according to the Australian Competition and Consumer Commission.
Sean, this isn't self-interest. I'm speaking on behalf of many listeners who probably all want to know the same thing. Should I, or anyone else, let's say it's me, should I fill up now or should I wait? Do you even have an answer to this? Is there an answer?
Well, it's a fickle world, Michael, so I defer to the competition watchdog's latest words of wisdom on the issue. Now, the Australian Competition and Consumer Commission warns that it's very general advice and a guide only. Keep that in mind. Its overall tip is when buying in one of the capital cities, buy on a weekday, particularly Monday, Wednesday or Friday around midday. Shifting on to the specific major cities, Sydney prices are peaking, so use an app to see where petrol prices have started to fall. In Melbourne, prices are definitely on the rise, so you will need to look hard to find cheap petrol. Mind you, buying petrol for under $2 a litre in Melbourne is still the norm. That's pretty good. Brisbane prices are rising and motorists are paying on average around $2.10 a litre. In Adelaide, prices are around the lowest point of the cycle. That's about $1.88 a litre for Adelaide. So basically fill up now. Perth's a bit of a world unto itself in many ways, including petrol prices. Its fuel cycles are actually much, much shorter than the other capitals. In fact, They can be up to about a week long rather than 4 to 6 weeks long. The ACCC advises that prices are pretty high at the moment, so use a fuel app to work out whether or not to buy petrol. There you go, Michael. My run around the country on whether it's time to buy petrol or not.
Those apps that you mentioned are so helpful in figuring out what is going on and to figure out kind of where within kind of even just a slight detour, like 2 or 3 minutes off your kind of your main roads, and suddenly you might find something 10 cents cheaper. It's worth downloading those apps just for that.
I agree totally. And they also show that you might have service stations around you that you regularly use. So there's probably 3 or 4 servos that I use regularly. And if you have a quick look at the app, sometimes prices have gone up or down at one but not the other. So that convinces me to go to particularly one. I like the BP where they really good coffee, or I'm BP near me. I digress. But so it is.
Yeah, you do.
It is well worth using those apps, Michael.
I did a video on this on petrol prices a little while ago for the Fear and Greed TikTok and for Fear and Greed's Instagram. There was a bit of a hot take on petrol prices for you, Sean. Went very well. Response was
hot take. A lot of hot takes this morning.
Yeah, hot take is just kind of like a bit of a spicy opinion.
Oh, I see. That's a spicy opinion.
Yeah, well, I mean, not spicy in the sense that you're thinking. It's not like this is what's erotic about fuel prices. It's just a hot take. Anyway, I'm going to move on. How did local markets perform yesterday?
The S&P ASX 200 closed flat yesterday, well, down just 7 points to 7,606 points. In short, the energy, healthcare and materials sectors underperformed and the utilities sector did best. Among the large caps, BHP and Woodside both closed down more than 1%. James Hardie, which is heavily leveraged to the US, it fell nearly 3%. QBE, Suncor and Cochlear were the best of the large caps. You could probably throw in Wesfarmers and Goodman Group as well. Qantas was another strong performer. Not that it's a large cap anymore. It was up nearly 2%. Shares in Evolution Mining climbed 8% to a 2-year high after reporting a 15% increase in gold output in March. It affirmed its guidance for this year. It also said it had found a new gold resource at its Queensland copper gold mine. And finally, Gina Reinhardt's Hancock Prospecting has lifted its stake in Lynas, the world's biggest non-Chinese producer of rare earths, to almost 6%. The move fueled speculation that Australia's richest person may emerge as the kingmaker in any potential tie-up between Lynas and New York-listed MP Materials. Now, a couple of weeks ago, Ms. Reinhardt emerged as a significant shareholder in MP Materials. There is a deal being discussed about those two tying up. Lynas' share price was up 6% yesterday as a result of all of this news, but clearly Ms. Reinhardt wants to have a say in any deal.
You mentioned Evolution Mining there, Sean. About, 18 months ago, maybe 2 years ago, we spoke to the boss of Evolution Mining, which was a really good kind of insight into the way a gold miner operates. So I'm just thinking ahead, brainstorming here. We might re-release that interview as our Sunday feature for this week.
Excellent idea.
Yes. I'm an ideas man.
No, that's a great idea. I mean, Evolution's kind of interesting. It's bounced around a lot and obviously had a big day yesterday, but it has come off quite a bit this year. In fact, I think for the full year, it's off about 4%. And given it's done better as the price of gold has gone up, but it probably hasn't been one of the better performing gold stocks among the locals outside yesterday, of course.
What's happening in international markets?
Well, the US Federal Reserve Chair Jerome Powell has quashed hopes of rate cuts in the immediate future in the world's biggest economy. That pushed Wall Street lower and the US dollar higher. As a result, the Aussie dollar dipped below 64 US cents for the first time this year. Mr. Powell said that recent data had not given the Fed confidence that inflation is fully under control and it will take longer than expected to achieve that confidence. He added, if higher inflation does persist, then the Fed can maintain the current level of rates for as long as needed. It's an about turn from just a couple of weeks ago and comes after a run of strong economic data in the US. It also sent bond yields higher yesterday. Now, the Aussie dollar touched 63.88 US cents before it rebounded slightly to be trading above 64 US cents. The news also put downward pressure on oil prices. Brent crude fell back under $90 US a barrel. Gold continues to trade near record highs. What I would like to say about this story, for about 18 months, we've basically said nothing happened when it comes to the Aussie dollar. Well, down about 63.88 cents, something is happening.
Yeah, that's exciting.
Oh, gosh, yeah. And it's not good or bad. Like a lower dollar, I mean, it's bad if you're traveling overseas, I suppose, but like there's lots of good things that come from a lower dollar. It makes our products more competitive, for example, or the iron ore we sell, or that's probably priced in US dollars, bad example. Our exports, though, that are priced in Aussie dollars become more competitive on the global market. So, yeah, it's good news.
We'll be back in a moment with the rest of the day's business news. Sean, the Department of Defence will be given an extra $50 billion over the next decade, reflecting what Minister Richard Marles called the most challenging strategic environment since World War II.
It means by 2034, spending on the nation's military will rise to 2.4% of GDP. It's a big ticket item, nowhere near as big as health or social security and welfare, but still a big ticket item. Mr. Miles yesterday released a new national defence strategy, which sets out a plan to defend Australia from long-range attacks. The decade-long program includes up to $76 billion for undersea warfare, including nuclear submarines and underwater drones, up to $69 billion for new surface ships, $21 billion for guided weapons, and $18 billion for missile defence. The government released a defence strategic review in April last year, which found the Australian Defence Force was no longer fit for purpose. This aims to correct that.
It was another extraordinary day yesterday at the Star Entertainment inquiry, with hearings put on hold after documents related to a former senior executive emerged. These are documents which Adam Bell SC said should have arrived 2 weeks ago.
This story just keeps giving. Yesterday morning, the hearing was adjourned after Star solicitors sent to the inquiry a number of documents relating, well, some of them related to former Chief Financial Officer Christina Katsabuba. On Tuesday, Ms. Katsabuba alleged that former Chief Executive Officer Robbie Cook hid the company's true debt position and the opinion of the government-appointed supervisor from other executors. She also claimed she was asked to alter the books to make the company's finances appear healthier. Mr. Bell said the arrival of documents, some of which related to her, to the CFO, after she gave testimony, needs an explanation. In fact, he said they should have been produced in answer to summons. This story, as I said, just keeps giving.
Rio Tinto has warned that its ability to reach forecast iron ore exports from WA depends on when the miner receives environmental and Indigenous heritage approvals.
The news comes as the company said there was a dip in production of iron ore in the first 3 months of this year. Rio expects to ship more low-grade iron ore over coming years as it develops next-generation Pilbara mines. Yesterday, it provided unchanged annual guidance from iron ore, bauxite and copper production. Meanwhile, BHP's flagship iron ore division will consume almost 7 times more power by 2040 because of fleet electrification, forcing the miner to expand its gas-fired power station in the Pilbara. It's going to rely on that for quite a few more years yet. It has sought permission from the West Australian government to increase its energy. Now, it will be required to power trucks and trains with batteries rather than diesel, but you actually have to get the energy to begin with. And if you don't have renewable energy, you're going to end up relying on gas and things like that. And that's what BHP has found.
Sean, there hasn't been much good news for Bank of Queensland recently, but yesterday its share price jumped 5%, notwithstanding it announced a 33% drop in cash earnings.
Yep, and income was lower, profit margins fell, expenses were higher, the half-year dividend fell. But, Michael, the result was better than expectations. And, of course, expectations rule the roost. Boss Patrick Allaway said Bank of Queensland had to consider additional ways to improve shareholder returns, and he called the playing field for regional lenders unfair. That's because the cost of capital for the big four banks is lower than it is for the regionals. Makes it harder for the regionals to offer decent home loans, for example. Mr. Allaway hinted at putting less resources into home lending, more into niche sectors such as asset financing.
US Ambassador Caroline Kennedy has warned Australia's high-quality battery minerals sector is under assault from state-owned Chinese companies in Indonesia.
Speaking in Perth, Ms. Kennedy said Chinese companies were destroying vulnerable communities under the guise of economic development. She went on to say that Australian commodities are not only the basis for economies of the future, but also for national security, and the health of our planet depends on them as well. The Australian nickel sector, of course, has been hit hard by depressed prices as Chinese-backed miners throughout Indonesia have flooded the market.
Now, I love this next story, Sean. What to do with planes that no longer fly? It's been a challenge for airlines for decades, but now Qantas and other carriers have created a coalition with the goal of using old parts in new planes. That I was thinking more along the lines of kind of selling off a 747, and I'd live in one, that kind of thing.
Oh, have you ever been somewhere? I once went. I was driving through the US, the Mojave Desert, and there were Pan Am planes. Pan Am is a failed airline.
Mm.
There would have been hundreds of them.
The plane graveyard.
Yeah,
It's legendary.
yeah. It's just spectacular as far as you could see. Just planes.
How have we never talked about this before? That is on my bucket list to see that. I didn't know that you'd done it.
Hey, I'll try and find it was a while ago, so I'll try and find a photo, but it was just amazing.
Oh.
Just amazing.
And so obviously they're now looking at kind of doing something with them apart from just parking them in the desert to rust.
Exactly. So carriers like Qantas want to hit net zero by 2050. They need to accelerate their supply chain decarbonisation efforts. Qantas has joined with 6 other aviation groups from across the world to launch the Aviation Circularity Consortium. Pretty boring so far, I get that, but here it gets a bit exciting. So the alliance wants to create value from the 8,000 end-of-life retired aircraft sitting in open spaces around the world. And that number's set to hit 11,000 retired aircraft over the next decade, according to a report in The Australian. Qantas's Chief Sustainability Officer, Andrew Parker, said there's a lot of untapped potential in high-value materials from retired aircraft. In fact, 90% of an aircraft is capable of being recycled and used in the manufacturing of new products. Wonder what the other 10% is, and let's not get that mixed up.
That is a very, very good point. Suddenly they put on an old 747 windscreen onto an A380.
Yeah.
Wait
A windscreen. Yeah. A bit of a crack in it. I think it'll be all right, though.
Yeah, no, it's fine. Just patch it up. She'll be all right. Yeah, this does come with some risks, doesn't it?
It does. It's a great idea because I think anything that you can reuse, but I just wanted to make sure that the stuff they're reusing suits that brand new plane.
I like that. This is you're a thinker.
I'm not a doer.
No, but I mean, they need people like you, Sean, to come up with these hot takes all over the place. International news time. The world's largest luxury brand, LVMH, has reported its weakest quarterly sales growth since the pandemic recovery as Chinese sales slowed and champagne turnover fell.
There's something in all of this. LVMH said that like-for-like sales in Asia, excluding Japan, basically it's China, fell 6% in the first 3 months of the year. Revenues in the US and Europe grew 2%, while sales in Japan increased more than 30%, helped by the very weak yen, according to the Financial Times. The company, which is controlled by the family of billionaire Bernard Arnault, is considered a bellwether for the sector. It's huge. It's got more influence than any other company. So what happens with LVMH is pretty much what's happening in the luxury sector. Sales growth at top brands Dior and Louis Vuitton was around 2%. Turnover in the watches and jewellery segment was lower, but the wines and spirits division was particularly weak. Like-for-like sales were down 12%. The main culprits for the downturn, there's 2. You've got Buckle. I'm going to ask you to guess. Well, one of them's champagne. Any thought on what the other one? Something that I reckon you would never, ever have tried, Michael. I've never tried it, but maybe we need to.
Oh, I don't know in that case. It's got to be something, it would have to be something fancy, something quite expensive.
Yes, Hennessy Cognac.
Oh, really? No one's drinking it.
It kind of reminds me of a James Bond movie or I've never tried it. I don't even know what a cognac tastes like.
It feels like the kind of thing I should be drinking in my dressing gown.
Yeah, definitely. Probably smoking a cigar.
Cigars and dressing gowns, sitting around drinking cognac. I think this is probably an image that we don't actually want to leave anybody with. So I'm going to take it upon myself, me being the responsible one, just for once, to move us along. We need to talk about Barbie because this movie was released 9 months ago. It made $1.4 billion at the box office. And extraordinarily, it just keeps going. Barbie-mania just keeps going. Kraft Heinz have announced the release of Barbiecue sauce.
Yes, Barbieque. And it is pinkish, as is the packaging. It's been launched in the United Kingdom and Spain, but demand from Australia means it may be launched locally as well. According to a story on Bloomberg, it's Heinz vegan mayo with barbecue sauce. So basically barbecue sauce and mayo together. It's a limited offer. Just 105,000 bottles are being made in the UK market, 12,000 in the Spanish market. Barbie really has been a boom time for Mattel, maker of the doll, with sales of Mattel jumping after the movie's release in July last year. In fact, I think it was during the quarter, it was about $2 billion in sales for Mattel. That has pushed on to other products, and so barbecue sauce is the next one. They were also talking about something called ketchup.
Well, you know it's coming, don't you? It just has to. The pressure will be too great. Up next, Sean, is the Fear and Greed Daily interview. You're speaking today with Matthew Saxon, Global Chief People Officer at Zoom.
I am all about Zoom and why it decided to call people back into the office. Seems a bit of a contradiction there. Nice fella, Matthew, an Australian working in Austin, Texas. So we talk about Zoom, its rise, and what's happened since the pandemic.
Yeah, it's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget to check out that new episode of our sister podcast, How Do They Afford That? I'll put a link in today's show notes so you can find it wherever you listen to podcasts as well. This week's episode is all about what to do if you have a spare $1,000. The few things to consider, whether it's kind of investing or paying off debt or savings, all those kinds of things. We canvass all of the options. I'm biased, but I think it's quite an interesting conversation. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 18th of April, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.